Is my mic muted? Can you guys actually hear me? Someone give me a sign if you can hear me.
We can hear you, brother.
Amazing, Sheldon Tentino. All right, guys. So the market is taking a little dip again, and I think we know what's causing this little dip. And if we're right, I mean, we could be right. If we're right, then nothing to worry about. It's going to be business as usual very, 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 very soon. And if we are right, I think we may have a massive opportunity to show you guys that no one is seeing. No one is seeing this opportunity, and I think we're going to show you this opportunity. So I think it's going to be a big show. And yes, we're late, but we're in Miami, and we're all hungover, and we were partying, and we're at the North American Bitcoin conference. But we are here, and we are bringing you huge alpha. In fact, if we are right today, we're going to bring you more alpha than any other channel has ever brought you. That's for sure. So stay tuned, and stay tuned until the end.
He's our man, if he can't do it, no one can. He's our man, if he can't do it, no one can. He's our man, if he can't do it, no one can. He's our man, if he can't do it, no one can.
Yo! Welcome back, Banter fam. I'm Crypto Man Run, and even though I'm in Miami and I'm supposed to be at the conference, here I am, and I'm bringing you alpha like I do every single day. My mate Sheldon Tentino is at the conference where we have been meeting the Banter fam. We gave away we gave away 1,250 tickets valued at $1,500 each. That's like almost
$2 million. Yeah, $2-3 million. That's ridiculous.
How's it been, Sheldon?
Crazy, brother. You know, obviously now we're just warming up and we're starting to get, but I think this whole place is going to get packed again as it did yesterday. But it's been amazing to meet the people, brother. There's a lot of fantastic people out here.
Still haven't smashed the subscribe button and the like button. Crazy people. Crazy people. I don't know why.
They're missing out.
What's up, Banter fan?
Hustle in the background.
We got hustle in the background. Hustle in the background. Amazing. All right, well, guys, if you're not part of the Banter fam yet, subscribe to the channel. There's millions of reasons to subscribe. One is the Banter bags. We're giving away the Banter bags. Don't forget that if you are part of the Banter fam, when we get to 700,000 subscribers, we're going to take the Banter bags, which is a whole lot of pre-IDO tokens, and we're going to give them to you, the community. So that's the first reason why you need to subscribe. The second reason is because if you're a subscriber, you can win Syn City pre-IDO tokens. This is a big game. Coinpanel is an advisor to the game. It's a massive game. If you're not part of it, well, you are just simply not going to win. The third thing is, if you're not going to our website, you're missing a lot. And I'll show you why I think you guys are missing a lot. First of all, the biggest story of the day has already broken on the website. And you can see the website is, you basically log in with Twitter. When you log in with Twitter, we know exactly who you are. And today, we're going to start giving away the giveaways for people who interact with the website. But you can see that already the chart of the day has dropped. It dropped earlier this morning. It dropped an hour ago. And we look at this first chart of the day is we're looking at one of the reasons why Bitcoin may be coming down today. And then a big story has broken, and there's two other massive stories that are breaking on the website. And at the same time, by interacting with the website, you'll see in a second, I'm going to pull up a list of people that have interacted with the website, and they're going to win $100 worth of Syn City. Also, if we get to 5,000 likes, then we're going to start giving away $100 worth of Syn City to the people here in the chat. If you were at the conference yesterday, guys, it was incredible to meet you guys all. It was such a pleasure to meet the Banter fam, to see the friendships that are being formed as part of this, as part of the Banter fam and the Banter community. Just absolutely surreal. The biggest line that I heard, and I wonder if Sheldon heard the same thing, is all I heard from people was, ever since I followed you, I've made life-changing money. My life has changed. That's all I heard.
It's loud. Brother, okay, I'm going to have to come back in 2 minutes. It's getting quite loud.
Okay, Sheldon, when you do, just go there and just ask the DJ to just turn it down. Tell him you're on an interview. You'll do that. And then
Yeah.
But anyway, the biggest thing that I heard yesterday was how much we've changed people's lives, and we appreciate you. We appreciate that, and we'll keep doing it because that is actually what keeps driving us. All right, let's get into the big part of the show today. I wonder, I know we've got CryptoBirb joining us, but I don't see him in the chat. Guys, if you can get Birb, let's get Birb on. But let's talk about what it is that is actually causing the market to be here again. It just feels like we are. Now, one explanation of what could be causing this is the fact that Bitcoin has gone through the death cross. You know, like this dreaded death cross. And that is when the 200-day moving average crosses over the 50-day moving average. And it happens on the way down. Now, you can see that happened over here. There it is. And as soon as that happened, literally as soon as that happened, the market started to move down from its weakness. Now, the big question is whether the 200-day moving average is anything to worry about, or whether this is just a whole bunch of hot air. And that's where I wanted to get Sheldon Tentino live from the conference. Sheldon,
brother, is it a bit better?
It's much, much, much better. Sheldon,
brother. Yeah.
The death cross, I'm going to bring on your screen. Let's quickly talk about the death cross and why the hell the market is responding to a death cross.
So remember this time, and luckily we've actually been through one of these, and this happened in this stage over here, where it was just after the May crash. And you remember what it is, guys? These moving averages are just taking the averages, but it's very much a lagging indicator, and it's really good to understand that we're getting a small reaction, very similar to what we got at this stage over here. When the market was starting to get a little bit green. We then had the death cross. We then got obviously reaction to that. And this is just obviously the simple retail, panicking out again. This is very much a retail, what I call it, strategy or indicator that they like to use. But remember, it's lagging. So it's showing this was already the damage that was done. This just comes and confirms, that this was a really strong leg to the downward side. And what happened here is once we finally got the death cross, there was a bit more, we had a little reaction from the market, and that's possibly what we're getting now. Which meaning, to see maybe, Bitcoin looks to go to the 40K region again or anywhere in that sort of zone again, which is okay. But, then it sees what we want to see after this is the slowdown. We want to go back up to the 200-day or back up to the 50, which is around 48. That's the target that I've been looking at recently. But, the last time we had this, few more side days, and then we started off the recovery again. And what's nice about it is you see this 50-day moving average. This is going to be the one that we're going to see this come down now over the next 2-3 days. So possibly, I think we're going to stay in the region of 40,000 to 42,000 for the remainder of the week. Get this MA down, and the break of this 50 MA, will then give us the indication now we're going to then attempt again. So remember that this is it's an important indicator, but it's actually a very much delayed indicator, and it's not something that's, you get small reactions to it, but it's not really something that's going to really rip the market to the complete downside. So
it's a historical indicator. So, we're getting the noise. I'm going to put in the waiting room, but chill in the waiting room, and we'll carry on talking about this. So yes, the market is looking at this death cross, this historical death cross indicator, and we're going to carry on talking to Birb about the death cross and what the death cross means. But regardless of that, if you look at the stuff that we spoke about yesterday, it's actually not looking that bad. And we said yesterday that we're getting into some kind of Cardano season. And if you did notice, the Cardano coins absolutely exploded yesterday. Giro Wallet went up. At one point, it was up 90%. Birbs went up to like 30 cents. Cardstarter, which is the launch pad. And again, I keep saying this, but if you think there's going to be a Cardano season, position yourself in the launch pads, because that's where you're going to get the cheapest entries, especially because all the tokens have gone down. Ardana, Charlie 3, we did pretty well. Coty, OCAM, all these things that we spoke about did pretty well. At the same time, some of our other players are still good. Fantom is still holding at about 272. But more importantly, the Tomb Fantom peg, the last I checked, actually was still intact. So the peg is still 1.01, which means that for those of you who are following the strategy and are staking your Fantom, A, you are getting 100% returns on staking your Fantom and Tomb with very little impermanent loss. And B, if you are staking your T-shares, because we are above peg, you're getting 266% on your T-shares. If you're putting them into what they call an auto compounder, then you're getting 1,333%, even in this down market. So yes, the market is a little bit weak, and we're going to talk about why the market is weak in a couple of seconds. But if you're playing smart strategies, you're still making a hell of a lot of money, in this market. And that's a lot of what I want to talk to you guys about today. I want to talk to you guys about how you can keep making a lot of money. And I'm going to show you a trick that I don't think anyone has seen yet. I'm going to show you a trick that I don't think anyone has seen yet about how we can extract or get our revenge on the institutions who've made money on us for so long. I'm going to show you how we can make so much money by bringing the and then we can make a lot of money on the institutions. And it's a big plan. I want to show you that, and I'm going to introduce one token to you. But let's get back to the market cycle. So if you look at the market cycle, yes, it's negative. And if you look at Twitter, there are multiple opinions. Some of them are positive, some of them are negative. You got TechDev52, who we really like and we've had on the show. He says he's expecting some kind of volatility coming soon because the Bollinger Bands are tightening because volume is compressing. So he says that there's going to be some kind of volatility soon. Birb, we're going to get Birb on today, but he says that we are looking at a 5-fold range bound fractal. It must be the rangiest range I've ever seen in years. The vast majority of discretionary traders tend to become more and more hopeless as the box develops. And I think that's exactly what's happening. People are getting tired. They're getting hopeless because the market's moving sideways. We also have, people still drawing these fractal charts and showing 2013 versus 2017 versus 2022. So you're getting this battle between everyone on Twitter as to whether we're going to be positive or negative. I decided to bring Birb on, and let's see what Birb says. Birb, welcome, my friend.
Hey, what's up? Good to see you.
So first of all, we haven't seen you for a while, and I know you had COVID. So how are you feeling, brother?
Not sure if it was COVID or some sort of like a cold, variation. I'm feeling good, refreshed. Yeah, all is good, man.
Amazing. Birb, you've been posting quite a bit on Twitter about, let's quickly look at it, but I think you posted about the range. You've also posted about the correlation between the 10-year Treasury yield and Bitcoin. Let's get a quick sense check of where you're at in your thinking.
Yeah, of course. So to start with, as you posted, as you highlighted, there was this tweet that I posted about the range bound fractal, right? And what many people kind of like misunderstand is the difference between the fractals and chart patterns. Chart patterns are set in figures, are set in geometric shapes that many people spot in charts that they would assume it has some predictive power. At times it does, at times it doesn't. While fractals, the fractal nature is some sort of like a complex mathematical phenomenon that you see, for example, in the snowflakes. And it means that it is self-complex pattern. It kind of just repeats itself on a smaller scale. And the front trends and chart patterns have the nature of fractals, as in larger trends consist of smaller trends, and smaller trends consist of even smaller trends, etc. And then the chart that you're displaying right now in the tweet is actually what I called 5-fold range bound fractal, as in this is the range, right? We had the 2021 being kind of like swinging and oscillating within well-set range bounds, the boundaries, the floor around $28,000 and the high, the ceiling, the roof, whatever you name that, supply at around $69,000 or $70,000 approximately. And we had entire kind of like, volatility focused and oriented between those levels in 2021. And this sets the something that I call, overall lack of consensus or indecision in the market. So if you compare that with the entire 2020, right, where you had a very strong, rebound, the bounce of March lows after the COVID crash, you had a very, upslope trending market. And then we transitioned into 2021, which was completely flat on average. If you display, you had been just comparing, MA50, MA200. If you play some longer term averages, it's completely flat. It means that entire past years returns are basically, flat or neutral. And this implies the overall indecision. This is the main trajectory of the market, which tells that as in 2020, it was the main narrative was upwards. 2021 appeared to have, completely flat shape, sideways, right? So this is building the main narrative. So the market main narrative is sideways. It lacks the momentum, it lacks the decision, it lacks the consensus, and it just keeps swinging back and forth on the major time frame. And then, because the major time frames are far more important than what happens on the lower time frames, this builds the narrative for what's happening on the smaller time frames. And then anything that happens on the smaller time frame is automatically, kind of like impacted by the overall bigger indecision. So we have the fractal of 20, the fivefold fractal as in a range in a range in a range, like a rangeception, as tech dev called that. And you would have 2021, you would have the entire like half two of 2021 as well, trapped in something that, well, many people would call head and shoulders, but it's not really head and shoulders pattern. Then you would have another local range and another local range inside the range and even smaller range, right? So we have fivefold range, and each of these ranges builds indecision and lack of directional consensus. So we have very, very indecisive market conditions, which is not really the case too often for Bitcoin's history, if you have a look, right? In this kind of like situation where you had literally range market across each and every single time frame, I think this hadn't happened in quite a couple of years, if you compare it with the price action of the past bull markets as well. So this is not something that is, I should say, very typical of Bitcoin. This is something that I see many people tend to overtrade and counter trade, trying to search and force certain directions. But the truth is, and the sad truth is, that the market is having no direction at all right now, and this builds across every time frames.
So what does that mean? Like, what do? You're saying there's no range. There actually hasn't been. If you get critical on Bitcoin only, there's no range. I mean, altcoins have exploded in the last year. If you look at Bitcoin has had no range. What's the best trade? What are we looking for in order to make a trade here? Because on a sideways market, I mean, maybe the best trade is to wait.
Yeah. So I usually bring three strategies to trade ranges. One of the strategies is something that I call inside range trading, as in you buy the low of the range and sell the high of the range, right? Whenever that appears, until you're proven wrong, because eventually the breakout would come and it would prove you wrong, and you're likely going to be found on the wrong side of the market. So inside range trading. Secondly, you have outside range trading, which is something that is directional, because outside range means that you wait for the breakout in a specific direction and take and position yourself in the direction of the breakout, right? So most of the people, this is what majority of the people would do best, if they actually wait for the market to unfold within the direction. And the situation is complex a bit here because it's fivefold. Like I said, you don't have just one range, you have 5 ranges, out of which you need to escape each and every single one while you unfold into larger timeframes, right? So first you need to escape a local range that is literally market bouncing back and forth. Then you need to escape a larger range, and even larger range, and even larger range. And depending on your time frame and your preferences, you kind of like can position yourself, either to play the short-term range or longer term range. Or strategy number 3, do not trade a range at all, and that's all.
All right, how relevant is this 10-year Treasury yield divergence that you spoke about? I think you pointed it out on one of your tweets, but there's a divergence between the 10-year Treasury yield and the Bitcoin price, which we haven't seen for a very, very, very long time.
Yeah. So the Treasury yields, this is not something that I necessarily call divergence. I mean, perhaps yes, this is divergence, but it's not a technical divergence as in the momentum oscillators. Instead, it shows you that the correlation has flipped, has changed, right? For most of the time throughout the past, at least year or so, ever since I think August 2020, 2020, you have seen quite a strong positive correlation between the Treasury yields and Bitcoin, right? And this has very recently changed. And this usually happens in the face of some external factors, as in you have some unpredicted, uncorrelated events that cause the price shocks, just like you would have for example, some military tensions, conflicts, across Russia, Ukraine. And this additionally combined with the threat of the rate hikes is usually what builds and changes the narrative as in the correlation. So deflationary threats coming from the rate hikes from the Fed, is something that eventually at times may flip the correlation. And I think, well, I cannot tell you what specific implication it has at this very moment. It's a bit too early, but it's definitely something that hadn't happened, for at least a year. So it's definitely a huge event, right? We need to be looking at it. That's the way I look at it. It just builds my awareness, builds my caution.
Birb, I know that you've got a hard stop. You tell us you got a hard stop like right now, but I do know that you're hiring, and you mentioned that you'd be appreciative if we could ask the Banter fam if there's anybody that wants to potentially join the Birb team. What exactly are you looking for to join the Birb team?
Yeah, thank you so much. Yeah, so basically right now we are actually searching for technical analysts, for talented full-time market technicians who want to help us by joining the team and helping us produce the technical content, helping us with their multiple market analysis for whatever content kind of like pieces that we have. This is set to enlarge, expand the team across many different directions. So first of all, we're looking for full-time market technicians. Then we're going to search for full-time fundamental analysts, full-time on-chain analysts, and other jobs. And if you guys want to know more, you can. I posted the link, so perhaps Ryan is going to be so kind and post it somewhere. But yeah, we have at theburbness.com/join us. Join-us is also find my pinned Twitter tweet, and that's where you're going to find the information about the technical analysis. Highly recommend it. If you guys have what it takes, come on. My team is going to actually just have some interviews with you, and we'll see.
My brother, Happy New Year. I'm glad you're feeling better. We're going to get you to South Africa now because I know that the COVID restrictions have been lifted. We're going to go on with the show. You have a brilliant year, brilliant day, my brother, and I'm glad you're healthy.
You too. God bless. Bye-bye.
All right. Let's look at why the markets are going down. So let's cut to the chase because like to get alpha per second. Let me give you alpha per second. Nutshell is we're in a position where this chart is actually moving the crypto markets. And if you look at what this chart actually is, this is a chart of the US 10-year Treasury yield. And we spoke about this chart before. And I remember when I drew this range for you, and I said, it looks like the 10-year Treasury yield is actually about to break out of the range. And what happened was the 10-year Treasury yield broke out of the range, retested, and now seems to be going up to levels that it hasn't seen for a long time. In fact, I think the last time that it saw these levels was actually before the COVID crash. So you need to understand what this 10-year Treasury yield is, because that's where the alpha lies today. The 10-year Treasury, what we're seeing as well in this 10-year Treasury yield is that the 10-year Treasury yield is usually very, very correlated to Bitcoin. Okay, so what we found is, let me try and find you a great chart, but this is a chart that shows the correlation between the 10-year Treasury yield and the Bitcoin price. And what you can see is that when the 10-year Treasury yield goes up, the Bitcoin price goes up. When the 10-year Treasury yield goes down, the Bitcoin price goes down. When the 10-year Treasury yield chart goes up, the Bitcoin price goes up. But now we've had the 10-year Treasury yield going up and the Bitcoin price going down, which is strange. It's being pointed out by lots of people. TED Talks Macro says, look at this correlation between the Bitcoin and the 10-year Treasury yield. I'd be surprised if Bitcoin doesn't follow, because he's saying, look, every time the price of the 10-year Treasury yield goes up, the price of Bitcoin goes up. Every time the price of the 10-year Treasury, the yield in the 10-year Treasury goes down, the Bitcoin price goes down. But now he's also seeing it. The price of Bitcoin is going down and the 10-year Treasury is going up. What is going on here? He's not the only one. Dan BTC916 said the same thing. He says there's a huge divergence forming between Bitcoin and the 10-year Treasury yield. A positive development. Period of divergence historically led to breakouts. Yields rising lately, a leading indicator of a breakout potentially. He's seeing exactly the same thing. Treasury yields are going up. Bitcoin price is going down. This divergence is not on. We need to understand, if we're going to really make sense of what's going on here, we need to understand what is this 10-year Treasury yield and why is it so important with Bitcoin, and why now is the market pricing it, is the market diverging And if the market is actually diverging, maybe, this is the beginning of two huge opportunities for us. One is maybe to buy Bitcoin, but there's another much bigger opportunity where we are going to teach you about it today. It's the craziest opportunity I've seen. And if my thesis plays out here, then we're all going to make life-changing money. So you got to listen till the end. Let's understand what is the 10-year Treasury yield. The 10-year Treasury yield is the yield or the return on lending the government money for 10 years. So if you lend the government money for 10 years and you say, look, the government sells you this bond, this note, and says, we will pay you $1 million in 10 years, and we will pay you a coupon rate, a yield rate. Say we'll pay you 1% a year, plus we will give you $1 million back in 10 years. How much are you willing to pay? A whole lot less. I'm willing to pay $900,000 and get $1 million back in 10 years, and I want annual coupons from the government because they're borrowing money from me. Now, today, if you buy one of those, you're gonna make 1.8%. If you would have bought one of those earlier on, you would have made less. You would have made 1.15%. So it means that what it actually means, and this is like quite tricky for newbies, the higher the bond rate, the cheaper the bonds are, which means that people don't want the bonds, so they're selling the bonds. And in order to entice people to buy the bonds, the government is offering a higher rate. So instead of this $1 million costing you $900,000, people don't want it for $900,000. They will only pay $800,000. And so as people sell off the bonds, as people sell off government bonds, the price of the government bond gets cheaper, and therefore the yield gets higher. So what we're seeing now, we're seeing people selling off government bonds because they want more yield. They're selling these government bonds and they want more yield. And as they're selling these government bonds, the bonds are becoming cheaper and cheaper. And therefore the return or the yield on these bonds is getting higher and higher. And traditionally, when this happens, they call this, and I think I've got something, a good explanation for you here. Let me just see if I've got this over here. Okay, I don't have it for here. But what's happening now is that these US Treasury bonds are going up, which means people are selling bonds. All right, well, if they're selling bonds, where are they putting the money? Traditionally, when they sell bonds and they put the money somewhere else, they typically move on to what they call risk-on assets. So they look to buy more risky assets to get returns. So typically money would flow out of bonds and money would flow into stock markets. Money would flow into risky assets. Money would flow out of the safe asset that's paying you 1 or 2%, and investors would go out and they would look for more yield. So traditionally what happens here is money would flow into the stock market, into the more stable stock market stocks, because they usually pay dividends. That is traditionally what's happening. And money would flow into Bitcoin. Where money won't flow is it won't flow into non-dividend bearing assets, which are traditionally tech assets, which is what we call growth assets. Because growth assets usually take their treasuries and invest the money that they make in keeping growth. And so typically money wouldn't flow into tech assets, which is why the tech NASDAQ has been harder hit than all the other stock markets. This is a chart of the NASDAQ, and you can see that it has been hit much harder. And so that's exactly what's going on here. What the market is doing right now is the market is pricing Bitcoin as a risky tech asset. It's pricing Bitcoin not as a yield-bearing store of value, but it's pricing Bitcoin as a tech asset. Everyone thinks Bitcoin drops because of inflations. More like correlation of BTC as technology means Jamie Dimon running correlated QQQ sell algo. What's happening here is the market is pricing Bitcoin as a technology. And when yields go up, people don't invest in growth assets, they invest in dividend-paying stable assets. And who are these investors? Well, these investors who are buying these corporate bonds are typically the institutions. It's typically the pension funds. It's these institution pension funds that are looking for yield because they have to deliver yield to cover their obligations. And so what they do is they move out of government bonds and they go and look for yield. They go and look for yield. Very, very, very important that you understand this concept. And so traditionally, what's happened is the market has priced Bitcoin as trade. It says thread on correlation of US 10-year yields and supply dynamics of Bitcoin. Growth and inflation drives yields. Rising yield indicates falling demand for treasury bonds, meaning investors prefer higher reward investments. Risk on. Falling yields suggest that they risk off. They'd rather give their money to the government because they want safe investments. Bitcoin correlates to US yields except for 3 times in its history. So here's the chart of Bitcoin and yields. Up, up, down, down, up, up, down, down, up, up, down, down. Except for 3 times in its history. In 2013, there was a little period. In 2013, bull run, rising yields suggest a risk-on macro environment. In 2014, the bear market. And in 2016, early bull market, Bitcoin price rises despite the yields. So basically, historically, Bitcoin has followed treasury yields. Treasury yields goes up, Bitcoin goes up. We're now at a divergence. And if a lot of these theories are correct, then what we could get is we could get an explosion of Bitcoin to close the divergence. So we could get Bitcoin being correlated, and all of a sudden we could get an increase in Bitcoin to close that divergence, which is amazing and interesting. And it could happen, and it probably would happen. Otherwise, it'll be the 4th time in the history of Bitcoin that it hasn't happened. It also wouldn't make sense because the global markets are pretty strong. Crypto's had a correction, and Bitcoin hasn't recovered from the correction. Bitcoin is still down just off the bottoms. I mean, we're probably 10% off the bottoms, but Bitcoin has not recovered from this correction. So the one opportunity here is to maybe buy Bitcoin, and hopefully Bitcoin will go up back to its correlation, back to what it's done forever and ever and ever. Up, up, down, down, up, up, down, down. It's almost a perfect correlation. So that's the one trick that you can do. But I think that's the thing that everybody's seeing. And that's not what we are seeing. I think I'm seeing something different. And I need you guys to follow me here on a line of thinking. And maybe our thinking is early and maybe our thinking is a little bit premature. But if we are right here, then I think we've got something special. So let's go through it. Let me get it for you guys. Let's go through it. Okay. Remember I said to you that when the pension fund managers and the big institutions who own these corporate bonds, they're looking for yield. They're looking for annual yield, coupons. They want to get 6% a year, 7% a year, 2% a year, 3% a year. Right now, they are selling the government bonds, and right now you can get 1.84% by buying government bonds, and that's a very, very, very safe investment. Or what you can do, and I think this is a very, very, very good trick if you are a US money manager, I think this is something that you could really do. You could go to Bank of America and you could get a whopping, an amazing, an incredible 0.02% return or 0.01% return. Everybody keeps asking about how DeFi will be disruptive. Just check the APY right now. At the Bank of America, you can get a whopping 0.01%. By the way, the account fees are like 0.3%. Okay. So this might be the clue of something that's about to happen. And I don't know if you guys saw on our website, but we told you guys that we think that there's going to be an amazing narrative that's coming now. And the narrative is not institutions coming into DeFi because into Bitcoin, because we've kind of had that. There is a new narrative, and the new narrative is that institutions may actually be coming into DeFi. Because with no interest rates anywhere in the world and no yields, and them looking for a more risk-on environment, the one place where they haven't come yet, where there are incredible yields, is DeFi. And we wrote this article 5 days ago. 5 days ago, this caught our radar, and we said to you guys, look, we think that this may be a narrative, an institutional DeFi narrative that's going to hit the market. And if you haven't read that, go and read this article, because it really does talk about how the tools for institutions to come into DeFi. And we even gave you 6 tokens in this article. We said you should buy Credo, and the reason why we think you should buy Credo is, don't buy Credo. Do not buy Credo. Stop, don't buy Credo, because I haven't bought my bags yet. Because they partnered up with MetaMask Institutional, and that could spark a DeFi narrative. Anyway, we gave you guys 6 coins, and we said, look, guys, we think there's going to be a institutional DeFi narrative. And now it looks like that narrative may actually really be playing out, because if the institutions are moving away from government bonds, which are safe investment, and they're looking for higher yields, one of the places they can come is they can come to DeFi. And they're not all going to come at once. They're going to come slowly, because only now we are building the infrastructure. And that is what this article spoke about. This article spoke about how Aave has got this Aave institutional product. We spoke about Donkey Finance. We spoke about Credo. We spoke about FTX. We spoke about a whole lot of others. We spoke about Spool, which is, for me, going to be one of the most important DeFi protocol tokens when they launch their mainnet in February. We think there's going to be a DeFi institutional narrative. They're not going to come all of a sudden. You're not going to get trillions of dollars. You're not going to get trillions of dollars. Oh, hold on. I see people are going to call me in the middle of the show. How very rude. How very rude. So you're not going to get trillions of dollars, but you are going to get a DeFi institutional narrative coming in. Cool. Why are they going to come? Well, because they can either get 0.01% and 1% for lending money to the government, or they can watch Miles Deutscher. And he yesterday did a thread of how you can earn 20% on your Anchor protocol deposits, 70 to 94% on Osmosis, and he did a great thread. He's the bomb. If you guys aren't watching him, you guys should be watching him, because he's amazing. But he's just highlighting what we already know, and what everybody is starting to realize. And what everybody is starting to realize, let me just get rid of all of that. What everybody's starting to realize, 6.8% real yields in the US versus 7 to 9% on stable coins. So you're starting to see that the world is waking up and starting to say, hold on a second. We can get these amazing returns on DeFi. And institutions who are now moving out of the 10-year Treasury yield and looking for a risky investment may just say, hold on, let's just allocate 1% of our money into DeFi, and let's start earning money in DeFi. And so that brings a second opportunity. The first opportunity is to buy Bitcoin, because the 10-year Treasury yield and the divergence between the 10-year Treasury yield and Bitcoin may actually just close, in which case Bitcoin goes back up to 55, 56,000. The second opportunity is to start positioning yourself for an institutional DeFi run. And if you don't know what to do, go and read this article. It's a 5-day-old article, which shows you 6 plays that you can make to do it. Cool, we all know that. But there is another opportunity. And this is the opportunity that I don't think people have seen. Listen to this. If you want to play in DeFi, the one thing that you need to get into DeFi is stablecoins. you want to play on DeFi, you need to get into stable coins, right? You need to have stable coins to be able to put your stable coins to start playing in DeFi. Everyone's acknowledging this. Jerome Powell has now said that stablecoins can be useful and they can coexist. Hong Kong Central Bank says stablecoins have potential to be incorporated into the mainstream financial system. Everybody's starting to talk about stablecoins. And the truth is that stablecoins aren't really such an interesting thing because they stablecoins. And naturally, when people talk about stablecoin, you think like, I thought like, why would I do a stablecoin show? It's the most boring show in the world. I mean, stablecoins. The most fun is unstable coins. It's like the most fun is unstable girlfriends. I used to have unstable girlfriends that were the most fun. The most fun is unstable. Okay. Now, why would I do a show on stable coins? I'll tell you why. Because I think here's the opportunity. And I don't think that many people have thought like this. So listen up. Let's quickly talk about stablecoins. There's 3 types of stablecoins out there, right? The first stablecoin that you have out there is a dollar-backed stablecoin, right? It's a USDT. Let me show you. There's an article here which I think really, it's a Medium article which talks about stablecoins. The first type of stablecoin that you get is a dollar-backed stablecoin. It is USDT, USDC. Basically, effectively, what you have is you have the assets and the liabilities. They're called full reserve stablecoins. Basically, for every dollar that USDT issue or USDC issue, it is backed by a dollar somewhere else, right? That's the first type of stablecoin. And those stablecoins are, well, they're a great bridge. They were a bridge between Web 2 money and Web 3 money. So you had dollars. You wanted to get your dollars onto the blockchain. You had dollars in Web 2, in the old financial system. And you want to bring your money onto the new financial system. And so you take your US dollar and you deposit it into USDT. And USDT or USDC hold a dollar in a bank account, or they invest it in a very safe investment. And effectively, that is what you call a dollar-backed stablecoin. It's boring. It's like Web 2 money. It's like a dollar-backed stablecoin. Not exactly the most decentralized stablecoin. We know that because of Tether, right? We know that because of Tether. We've seen what happens with Tether, where the money is in the bank, but is the money actually in the bank? No one knows whether the money is in the bank. That's the problem with these dollar-backed stablecoins. The other problem with these dollar-backed stablecoins is that the authorities can come and seize the money. So if there's a problem, the IRS or whoever it is goes and seizes the dollar-backed stablecoin. If there is a problem, even the issuer itself can freeze the addresses. So dollar-backed stablecoins are not interesting. But that is one of the stablecoins that institutions may, when they come into crypto, they may go take the dollar-backed stablecoin, they may go to Celsius or Abra, and they may go and stake the dollar-backed stablecoin and get 9% or up to 9 to 14%, which is already much more than they can get in traditional finance, and it's a respectable return. It's like a super, in traditional finance, you say, hey, I got 9% return on dollar-backed investments. Fucking, you're a god. Okay, like 9% return on US investments? You're a god. If I went to my unstable girlfriends and I told them I earned 9% on stable coins, my God, you don't understand what would have happened that night. Okay? So one way that the institutions may come in here is on dollar-backed stablecoins. Okay, great, not exciting for me. The institutions, when they come here, are going to start learning about non-dollar-backed stablecoins. They're going to start finding out that there is actually a new type of money, right? And this new type of money is algorithmically backed money. It is a new kind of money. And when it comes to algo stablecoins, they can get up to 20% on places like Anchor Protocol. And they can get even more because this is not the only type of algo-based stablecoins. Remember, there's another type of stablecoin, which is a collateralized stablecoin, like Magic Internet Money, where you give them assets and they issue a stablecoin. That's what you call a collateralized stablecoin. Or DAI. DAI is an over-collateralized stablecoin. So there's really like three types of stablecoins. There's a dollar-backed stablecoin. We can't make money on a dollar-backed stablecoin. There is an algorithmically backed stablecoin or a seniorage coin like Luna, where there's no money backing the coin. It's just the Luna Terra algorithm. And then there's a third kind of stablecoin, which is a collateralized stablecoin, which is collateralized by assets, like Magic Internet Money, for example. Now, here's the trick. When the institutions come into crypto and start looking for return, they will do what we did. They will go to first, they'll go to USDC and USDT, and they'll put it in Celsius or Abra, and they'll get 9% and 10% and 14%. And then they'll become a bit cleverer, and they'll realize that, hold on a second, we don't need Web 2 money in Web 3. We should be buying UST, and we should be staking UST, or we should be buying Magic Internet Money, and we should be staking Magic Internet Money. We should be earning 20% on our Anchor Protocol. Let's just quickly we can be earning 19.47% on Anchor Protocol. Let's put some of our money into Anchor Protocol. This is where we beat the institutions, because we know what cycle they're going to go through. We can get the upper hand on them. If you believe in this thesis, buy Luna now. Because when they come here and they start buying UST, the only way to mint more UST is going to be to burn Luna. The only way, if you think that they're going to start getting, for example, Magic Internet Money, MIM, well, what do? You go and buy a spell. You go and buy the Abracadabra token. So I think we've got a one-up on the institutions. They're going to come here looking for yield. What we're going to do is we're going to buy the protocols that we're going to buy the central banks. We're going to buy the protocols that make money when they use that money. Oh, they're going to come here and use Terra? We're going to buy Luna, way ahead of them. So when they buy Terra, UST, they're going to burn our Luna, and they're going to drive the price of our Luna up. We here first. We know a trick that they don't know. They're going to come here looking for yield, and them looking for yield is going to mean an increase in our stablecoin provider holdings, aka MIM, aka Abracadabra, aka UST Luna. That is something that I don't think people have seen. The institutions are coming here for yield, but we're going to own the protocols. We're going to own tokens in the protocols that they are going to use to get the yield. And we're going to get the one up on them. And the more money they bring, the more money we're going to make. We're just going to just make money while they come here and look for the yield. That's exactly what's going to happen. Not only that, I think I found a gem that no one's talking about. So if you've made money on UST, on Luna, you've made money because you understood that UST was going to become an amazingly used stablecoins. And as the institutions were going to come in, well, you thought to yourself, okay, I'm going to, or as people start using Terra, the price of Luna went up. But Luna is now a mature coin. There's another one that's come out, which I think is going to be very good. And full disclosure, as I said to you guys, I bought the investment on the open market like everybody else, and that's Vader. Because Vader is doing exactly that. It's launching it's a protocol with a decentralized exchange, and it's got this USDV collateralized stablecoin, which works exactly like Luna with this mint burn type mechanism. So that's another opportunity. But there is another type of stablecoin that is launching, and in fact, it's launching its mainnet today. And I spoke about it yesterday on my Twitter. And not only that, I think we're publishing, or we have already published an article about it on our website. Here we go. You see, if you just go to this website, you will get alpha like you've never seen alpha before. It's already on the website. I haven't even spoken about it. It's already up here. It's on the website. And I want to talk to you about it because it's a new type of stablecoin that is launched. Remember I said to you there's a few types of stablecoins. One is a US dollar-backed stablecoin, USDT, USDC. Then you've got a collateralized stablecoin, which is like DAI or Magic Internet Money, where the stablecoin reserves are collateralized with collateral. And then you get the third one, which is an algorithmic-based stablecoin, like Terra or like Vader, or USDV, which is the Vader stablecoin. There is now a new concept in stablecoins, and the mainnet for this new concept in stablecoins launched today, and no one's talking about it because no one really understands it. You know who does understand it is the people that work at Multicoin Capital, who are, in my mind, the smartest investors in the world today. Multicoin Capital, for me, are the smartest investors in the world today. And what does Tushar Jain tweet yesterday? He says, very excited for the launch of UXD tomorrow because they also invested in UXD protocol. So what is this UXD protocol? Why is it so amazing? Why is it that Multicoin invested? Why is it that Solana invested? Well, the reason is it's a new type of stablecoin. And this stablecoin is a collateralized stablecoin. It's completely decentralized, completely uncensorable. And it's decentralized, it's stable, and the way that they create their stability is where the real innovation is. UXD is a price stable coin because it's backed by delta neutral positions. And for those people who don't know what a delta neutral position is, I'm going to read this to you. UXD employs a novel stability mechanism that differs substantially from existing offerings. The key innovation from UXD is the use of on-chain perpetual futures contracts to create an on-chain delta neutral position, effectively a risk neutral position of spot and perpetuals. So what they do is they collateralize the coin by taking a Bitcoin spot position and a Bitcoin perpetual position, as such that the risk is delta neutral. In other words, it's a delta neutral position. So it's a completely decentralized stablecoin, which is backed by delta neutral swap positions. The result is that it's algorithmically backed. It is almost guaranteed to hold its peg. And to that vein, they've also raised an insurance fund just to make sure. But it's completely decentralized and non-censorable because all of this is done through decentralized derivatives. And so it's not like the US government can start issuing, because it's completely decentralized and it's on-chain. And it's a revolution in stablecoins. It is a new concept in stablecoins. Now, this token's been on the market they did their IDO or their equivalent of an IDO pretty recently. And I don't think that people have woken up to UXP protocol yet. I don't think that people have woken up to the power of it yet. So I think it's definitely one worth looking at if you buy this institutional narrative. Start looking at this coin. They are launching their mainnet today. And I think it is one of the smartest concepts that I've heard in crypto for a long, long, long time. All right, that's me. A long show, but that's me. I will see you guys again later. I think we may do a show with Hustle. If we don't, I'll see you guys again tomorrow. And if you are in Miami, come and see us in Miami. Oh, wait, no. I said I was going to do some giveaways for people who interacted with the website. Do I have the file? Let me find you guys the file, and then we can do some cool giveaways. Let's see if I've got the giveaway file. I actually have to open. Let's see if I can find the file. If not, no, I know I can do this. Let's see, downloads. Let me find this for you guys, because I promised you guys I'm going to do giveaways today. Okay, I have the file. I have the file of people who've been on the website. I'm going to give these people Syn City $100 giveaways at pre-IDO prices. Let me quickly, if you're here, if you haven't been to the website, get onto the website, interact with our website every day. All right, so random. I'm at random, just going to scroll and select. All right, so you got Kevin. What the hell? Kevin, use Kevin 1. You're a winner. You're a winner. Henry Vex. You're a winner. Just for interacting with the website. $100 giveaways. $100 pre-IDO giveaways. Let's give BJORT underscore. You are a winner today. And let me do one more. One more for the community. Chum7. Remember, these are your Twitter names. Yo, Sheldino.
What's up? I had to try to sort out the volumes and stuff this side. Did we chat about the Coty breakout and the Theta breakout? I just wanted to confirm those two, and the Paribus breakout. The coins that are running against the
we didn't chat
one.
about it, but because my time is up, why don't you do a bit of a show later? Why don't you do like a 10-minute charting show later?
I would absolutely love to.
Amazing. Let's set it up. Let's do it. We'll do it from the conference. We'll do a live show from the conference later.
I would love to. I have to show it. Cool, brother.
All right, amazing. Well, there we go. So we've done giveaways, and Sheldino's doing a live show from the conference later. I will see you guys again from the conference later. If you're at the conference, come say hi. Come meet the fam. We'll see you guys again tomorrow or later. Until then, trade well, my friends. Okay, so
who knew stablecoins were so
firing
cool?
the social media guy. I'm firing Kyle. I've got to fire Kyle. Kyle started the show very badly, so we have to fire Kyle. To fire Jimmy.
It's fine. We'll get a whole new team.
That was
we're going to apply at Birb now. That's what we're going to do.
No, but you got to be a technical technician if you want to apply.
Hello, Federico.
Hello.